I am Hendrik Jordaan, a partner and co head of the private family office investments transactions group at Nelson Mullins. The Long View is a podcast where we sit down with visionary family office leaders, investors, and founders to discuss and explore how they build value and values that last generations. Our guest today is Tim Brown, Chairman and CEO of Somos22 and Fortaleza, two of the leading family office organizations globally. Tim is also an advisor to the Anschutz family, a four-generation plus Denver-based family that is known as one of the most disciplined and diversified investment platforms of families around the world. Tim has worn many hats. He has been an author, a CEO, an entrepreneur, and today he's going to share insights that he's gained over decades about family offices, partnerships, investment, and how to invest for the long term. Our guest today is a longtime friend of mine, Tim Brown, who is in Miami today. Is that right, Tim?
I am. Yeah, it's good to be home. Great to see you, Hendrik.
Well, thank you so much for joining. By way of introduction, I know that Tim is extremely well known in the family office and the broader investment community. But for those folks who do not know Tim, Tim really has worn a lot of incredible hats over a multi-decade career. He's currently the founder and chairman of both Somos 22 and Fortaleza, which are two organizations really reshaping the family office community networks and investment networks globally. But his career goes back decades. Previously, and still is very involved with as a strategic advisor to the Anschutz family based in Denver, which, as many people know, is one of the most prolific, disciplined, and diversified investment platforms of any family globally. Is a prior author, he's a CEO, he's an entrepreneur. Most importantly, I think he's very proud to be an amazing father to his children. And Tim, thank you so very much. I know you're a very busy man, jet setting globally, particularly with SOAS 22 and Fortaleza. So, really appreciate you taking the time to join today.
Yeah, thanks, Hendrik. Great to be here. Um, this is going to be fun. I can tell already.
Well, we always have fun. We always have fun. Well, Tim, really what I'd love to dig into right away, and I want to talk a little bit about Fortaleza and Somos 22, but before we even get there, I know your life has been an incredible journey and would be very grateful if you could maybe speak a little bit to your why, right? You're an author, you're a pioneer in the family office space, but I think of you really as a strategic thinker who does things very deliberately, very intentionally, and very carefully. So, if you could talk a little bit about your why, what inspires you, and perhaps link that to your current initiative, that would be very interesting.
I I think from in my entire life, I've always been a curious person. Number one, I've always liked learning. I've always been, uh, for whatever reason, just attracted to asking a lot of questions to people who I found to be very interesting and thoughtful. And when I think you just inherently kind of feel this, how can I be at the center of people, relationships, and serving? And as part of that, that's how I really feel like my why has shaped into what it is. Um, I really enjoy um, people. I enjoy learning. I enjoy creating. I think there's two different types of operating systems that we run as human beings. There's not three or four or eight. There's just two. It's either love or fear. And I feel like I want to always be in a situation where I love what I do and I love who I'm doing it with. It's kind of funny. There's this great quote that I always talk about that Warner Earhart talks about in terms of the difference between being uh, 30 years old and having all the time left in the world, or a certain age and having 30 years left. I think the intentionality about why are you doing it, who are you doing it with, I mean, all of those things really take a whole different meaning. So anyway, that's my long-winded answer of saying that, you know, I kind of fell into this world by accident, but yet I feel like a lot of the things that have been in my DNA since I was a child are still kind of at play. The only thing that's changed is I'm about ready to turn 56 years old. Um, and but besides, losing a little hair, a little hearing and
56
eyesight.
young and much fitter than me. So, I'd love to ask if if I recall correctly, the title of one of your books was jumping into the parade. Did I get that right?
Yeah, that's right. My first book and came out in 2014.
Well, maybe speak a little bit about that because I think that ties in a little bit, right? That's part of your value set, and if you don't mind, maybe linking that to how how that spoke to you in launching Fortaleza and Somos 22 as leading family office organizations.
Yeah, that's great. I think when I grew up, it was always, I think, your worth as a human being was really, in my mind, was tied to what you did for a living and how successful you were. And so, without getting kind of too up there, like I'm like some Zen guy on a mountain, there is a lot to say about the difference between doing and being. And I remember this eye-opening experiment that I had a coach, and she walked me through this. She said, "I want you to experiment with this different thought pattern, and I want you to try to detach who you are from what you do for a living." And so she had me create this mind map of a sheet of paper, and I put my name in the middle of it. And I had to put everything I was that had nothing to do with my job. So you start off with the easy ones, right? I'm a son, I'm a father, I'm a nephew, I'm a grandson, and then I'm a photographer, I'm a writer, I'm a community member, I'm a good friend. I mean, and you continue. And I had to, as part of this, I had to fill out the entire sheet of paper until there wasn't anything left on the paper. And that was that experiment was, could you do it? Could you stick with it and really prove to yourself that you're so much more than what you do for a living? So when I wrote the book, Jumping into the Parade, I had come out of a fairly big business setback. And I didn't really at the time understand that a lot of these teaching events that we have, and you can't change the past, you can only change how you feel about the past. And when you lean in, you can either take those teaching events and learn from them and improve and get better, or you can have them hold you back and be a victim of it. But I really feel like it's very binary and it's two choices. And for me, I really kind of let myself corkscrew in the wrong direction. And it was not a healthy direction. And so I wrote a book, Jumping into the Parade, because it's something that my former father in law used to talk about to me, that 99% of the world sit back and watch the parade go by, and that it takes a lot of courage to get in the parade. And it takes tenacity and grit to get back up when you fall down in the parade and you skin your knees, or when you have people in the peanut gallery kind of heckling you or whatever, but that you get up and you just keep moving forward. And that by nature of that, you attract other people into your life who share the same values, the same philosophies, the way that they want to show up. And so for me, I wrote that book as really a blueprint for how I completely shifted my life and went from, a victim's mindset to very much an owner's mindset. And it really set up where I am today, frankly, because it had me, looking at the journey as being so valuable, but not necessarily judging things. And so many times, judgment, especially self judgment, and letting the critic kind of uh, take over, can really do some pretty negative things to you. So, anyway, my goal with the book was to positively impact a million lives by telling my story, and really getting into a lot of the things that I felt, um, things that I learned along the way, sort of unwinding a false set of beliefs.
It's a beautiful story, really, right? Because you think about, yeah, a single quote from your father-in-law, right, that picked you up in a very difficult point in your life, not only changed your life in a meaningful way, but then propelled you to write a book, right? Who knows exactly how many people you touched? Certainly thousands, maybe hundreds, maybe millions. Who knows? But the point is the proliferating effect of that single comment, right? Which I think is has interesting echoes vis-a-vis families, because I think the lessons that, whether it's an amazing quote, whether it's an insightful story, whether it's an experience that's shared in a trusted setting, can give fuel to other families to help them avoid failures. And when inevitable failures occur, get back up like you did.
It's an interesting quote. It's so funny you say this. I was just talking to somebody about this today. I'm sure you've heard this quote a ton of times that if you've seen one family office, you've seen one family office. But I think the difference is when that quote came out, I think we were more in what I would call private office mode, and that family offices hadn't really become the industry that it is today. And it's still very siloed, very opaque, very private, which I completely agree with in that regard. But I think you have a lot more support structure now. You have a lot more ability to compare notes with other families, and from that, I think a lot of times a family will have a liquidity event, and the structure of that liquidity event can drive a family office versus the governance and the values. And later you may shift into that, but a lot of times that's how one starts, and then it pivots.
And I want to go a little deeper on that because part of one of the themes, as the name suggests, for this podcast is looking at time differently, right? Looking at it not only on a quarter by quarter basis, but looking at it multi generational. And I think when you look at the construct of time differently, you also look at the world differently, right? You don't think of yourself as you've been talking, you've been expressing your values of making a positive impact, creating ripples that flow very, very broadly, right? But maybe talk a little bit about how you think your experiences, both wearing your own family office hat, working alongside some of the largest family offices on earth. Maybe talk a little bit about time, right? And the construct of time, and then link that to the values and your purpose.
That is a great question. So let me start off with this, related to time. And a friend of mine said this to me maybe 3 years ago, a friend in YPO. He said, it's interesting when you think about the world of investment because traders think in seconds and analysts think in quarters and fund managers think in 5 year increments and families think in generations, right? And so it's so interesting, right? Because all four of those roles are people who we interface with on a regular basis and each have very different time horizons. And so when I think about the question that you just asked, it's interesting because I think families are playing an ever greater role in operating companies and competing, I guess, with what I would call traditional private equity, where it's private capital, but it's not in the form of an asset management side. It's really private capital that has typically more flexibility on timeline. It may have more flexibility at capital stack, has more flexibility in maybe some of the other parameters that you can underwrite to, and you may have an expertise in some areas. And so I think there's been that shift, to maybe more families playing in that role. I say that, and it's kind of interesting. I think a lot of the belief system in the world is that the public capital markets ultimately drive the world economy. And And I get that because a lot of what you read in the news has to do with what's happening in the public capital markets. But the reality is, and back to your timeline question, families employ 82% of planet Earth. Families are the ones that get behind typically the entrepreneurs or behind the venture firms that get behind the entrepreneurs that create new jobs, new value, new stability. They're the ones that give a lot of the charitable giving. They do the big public private partnerships, and they don't cycle in and out in 2, 4, 6 year elections. And I think many people really look to them. It's interesting. I was in Chicago doing a Jeffersonian dinner this June, and I asked the question to all of the family offices sitting around the table, and many of whom were old, uh, in terms of US sense, older family offices. And I asked the question, what do you want to be remembered for and how will you measure it? And one of the families sitting there said, it's interesting. When you think about underwriting an opportunity, a lot of times you're underwriting, the risk of the sponsor, you're underwriting the deal itself. But for us, we actually start off with the reputational risk to our family because we've been in the Chicagoland area for many, many years. And that's really important to how the community sees us. And so I think a family just thinks differently around that. What's happened, what's very interesting, is that I think over the last 20 years, as we've more from a private office to what I would call a single family office or more sophisticated multifamily offices, you now have the ability to aggregate capital into club deals. And sometimes those club deals are just, one class of stock. They're not always in a promoted sense. And so you've got the ability to really create some very dynamic pools of capital that can compete head to head with some of the traditional, what I would call upper middle market or bulge bracket.
I cannot agree more. I think we're an incredibly interesting time, right? Where the AUM, call it allocable to private deals in single multi virtual family office, is just exploding and is going to continue to grow. And I think at the same time, certainly what I'm noticing is with more and more private fund managers not being able to raise the next fund, oftentimes because they cannot return capital in this environment, you're
Yeah.
seeing this incredible pool of human capital talent that may not get promoted to MD, may not become partner, and are looking to family offices increasingly to bring that skill set and expertise, the best practices of private equity, honed over decades into the family office sense, and then really supercharge it, like you said, the ability to make minority investments, the ability to have longer hold periods, the ability to take advantage of unique tax structures in real estate, all of which I think is such an incredibly exciting place for the family offices that can use that competitive advantage effectively.
Yeah, I mean, it's certainly a whole different world when you're using cash on cash as your metric and not IRR, right?
Yes, absolutely. Nobody eats
And
IRR.
I was talking to somebody the other day, and we were talking about this 2 and 20 structure, and he said, "Well, I just need to know: are they in for the two, or are they in for the 20?"
Well, what's crazy to me when you look back at time, the 2 and 20 structure has been around. You can trace it back. Some people say it goes back centuries, but suffice it to say, in early venture funds where people were moving, betting on exploration and the like, there's many different stories about where the concept emerged. But think of traditional private equity and venture as a very young, it's only 50, 70 odd years old as an asset class. And then, you look at families that have been investing, like you said, backing entrepreneurs, creating jobs, being creative, working through difficult times for centuries, right? And really further than
Yep,
that. It's just two fundamentally different concepts.
I agree. Yeah, definitely.
So one of the things I want to bring it back to a little bit, Tim, is about, because I want to talk about Somos 22 and Fortaleza and what you're building. Because again, there's many incredible family office organizations out there. You've got the YPO network, you've got Camden Wealth, you've got Fox, you've got, you know, Tiger, go on and on. But you've really, having been part of most of these and having the experience to draw on, you've crafted a niche that truly is different than the other products out there. Talk a little bit about how that works and where you see that niche sitting.
It's interesting. I think the thesis behind Somos 22 was when we looked at what families were really seeking and most of the conversations we were having between family offices, it was really less about content and education and more about feeling connection and community. And our thinking was, content in some regards has become very asynchronous, and you can access that content from any time, any place, anywhere. But what you can't access are the people sitting to the left and the right of you who have similar things from an experience share that can be very valuable. And so our thinking was, let's create a safe place for families to meet. They can compare notes, get to know one another. And if we do our job right, 5 generations from now, people will still know each other. And that's 100 year out kind of thinking, but that was the kind of the guiding thinking once upon a time. And this year with Somos 22, we'll end up doing 51 events, hosting just over 3,000 unique family offices. And so I think the reason it's gone parabolic in a year and a half is because people really are seeking connection, and the numbers show it when you measure who's showing up and really what they're looking to get out of it. And we keep it very simple. Like our signature event, right, is a coffee connect. This is just an opportunity for people to come in and have coffee, tea, or water for a couple hours and get to know one another. And the Jeffersonian dinners that we do is an opportunity to go a lot deeper in a 3 hour period of time and talk about succession, next gen, values, complexities of wealth, number of those kinds of topics that aren't necessarily investing related. One of the questions that I love to ask is, what do you see as the biggest opportunity for your family office in the next generation? It's a very interesting way to look at it. So, Somos 22 really came out of that as an ethos. And with Fortaleza, it was, how do we take a lot of the best practices, a lot of the principles, a lot of the things that come out of running a family office and create a safe place for professional managers or for principals who are the pinch point of where decisions get made on a day to day basis. How do we have an alignment of mission, vision, and values so that when people show up, you really can scale trust to such a high functional level that you're willing to really lean in and do relational share and idea share and experiential share at really a level that you don't get in a traditional conference. I'm a huge fan of YPO, and been a very involved in YPO. I think in many regards, what we're doing in Fortaleza, even though it's capped at all of 125 people, we intentionally are trying to keep it small so that everybody knows each other. It creates accountability and engagement, within the group. Is really to when I first joined YPO, it was all about that person sitting to the left and the right of you who were the pinch point of where decisions were making, and you were all qualified to be in the room. And the conversations and the experience share, and really just being in that environment, right? You are the average of your 5 closest friends, to quote Jim Rohn. And that's really what we're trying to do with Fortaleza, is create a global organization of 125 families.
No, incredible network, and certainly everything I've seen and heard about it is, it is just that. It's interesting, Thomas. I've sort of reflected a bit on what you're building at Somos 22 and Fortaleza. The most analogous example that sprung to mind for me is, the Rothschilds family and what they did starting in the 1800s in Europe. And for those folks in the audience who may not be familiar with that, I know you are, Tim, but the patriarch intentionally moved five of his sons to five key cities. I think it was London, Paris, Frankfurt, Vienna, and Naples, if memory serves. And he did so intentionally to have five different networks around the world, where each son in those days, pre internet, obviously, had the ability to gain valuable information about trading routes, about political situations, about credit that they then shared in a highly structured way, much like what you're doing through your network, allowing the family to be safe, allowing the family to get higher returns, allowing the family to achieve not only its economic investment objectives, but also protect the other value sets. So I really think of what you're building here is a, call it a multifamily echo of what the Rothschilds did.
Wow. Wow. Is that quotable?
Everything is quotable. Everything is quotable. But yeah, no, I love what you do in there, and I get that power. Yeah, it's interesting. When I was an undergrad, I actually majored in economics, and I did my one of my theses on network externalities and the value, the incremental value that flows when you're building a really powerful network. I think that in this day and age, like you said, you may be able to connect on LinkedIn, you may be able to connect electronically, but there's no substitute, for the in-person component. So I cannot agree more. Um,
I
yeah,
I think it's like, if you're in a canoe and a storm comes up, anybody that's been in a canoe before where a lake turns into big waves knows what I'm talking about, where it's easy for a canoe to go over. Well, if you have an outrigger on the side of your canoe, that doesn't have the same ability to go over, right? And if you have two outriggers on your canoe, you really have a lot of stability. I think of Fortaleza as being having two outriggers. The first is you're creating this big external network of people who coming to you through very trusted network of people and specialty resources and ideas. But also on this side, it's a group of 124 other people, and you're able to go super deep. And so it gives you the depth of perspective and ideas. And over here, it gives you the depth of external network that's global, which has its own. So that from a balancing side of things, it can be very, um, I think, a incredible place to be.
yeah, and family offices, staying with that metaphor, you have more and more family office ships sailing around the ocean, making investments, making a difference in the world. And if you don't have the right balance around you, particularly when the waters get choppy, which they always do at some point, you have greater exposure. I'd love to transition a bit and spend a bit of time talking about the future of family offices, right? A lot of which we've spoken about already. You've shared amazing insights, how you have designed Fortaleza and Somos to equip families to be ready for the future. But maybe in more general terms, when you're looking across the families you're directly involved with as a principal, families that you advise, families that you have trusted conversations with, what is the future? What is the family office world going to look like 5, 10, 20, 50 years down the road?
That's a great question. I don't, there's this progression, right, of family offices. Like when you look at the single family office, there's three different types of single family office. You've got a lot of times a liquidity event that creates, a founder's family office. And many times you're still working with a lot of other third parties that help you. You have a name, you may have an executive administrator and a bookkeeper. Um, but just about everything else is relied upon with third party. And then sort of midway, you become a level two single family office. And I say midway, meaning sort of on a curve where you're now maybe more Gen two. And so you have a lot of your trust and estate in place. You have a lot of your reporting in place. You know what your surplus capital is. You know what your core capital is. Your portfolio construction in many respects has been done. You have a lot of the governance that's probably in there. And I think from that stability, you maybe start to bring other people in on your P&L who are helping with, especially in an endowment style portfolio construction, helping more on the alt side. And then I think you get into Gen 3 and above, where, and you have, what I would call a multi-generational single family office, again, of the three types, where it's predominantly professional manager. It becomes much more preservation of assets typically, versus expansion like you might have earlier. And so there's just different objectives there. And so I think, the future of the family office, I don't think is ever going away. I think there's always this evolution of how you use governance to really create stability of that family office. And what do you want it to do? I get lots of phone calls from people who say, "Hey, I want to start a family office." And I say, well, there's three questions that you really need to ask yourself. The first is, why do you want a family office and what do you want it to do for you? Right. The next question is, who are the stakeholders that you ultimately want to serve with this? And the last piece is, what are you going to insource versus what are you going to outsource, to give you kind of a feeling of how complex do you want this going concern of a company to be? Because they are companies. And so when I think of the future of the family office, I think it's directly tied in many ways to the next generations and ultimately what the goals are. That's why I think it's so important that the values that created the wealth have a way to impart themselves into the future generations, and that each generation sees itself as Gen 1 and has the ability to create again, right? Because I think as human beings, we're in our highest and best selves when we're creating. And so to answer your question more directly, since I have a tendency to go on and on and on, and
No,
I'm
it was very
sorry,
interesting. Yeah, no, no, that's great.
I think the future of the family office is very strong. That the proliferation we've seen over the last 10, 20 years, where it's gone up by an order of magnitude, isn't going to go away. I think families are going to get more and more sophisticated in terms of what they're doing front of the office and back of the office, and how AI functions, especially in back of the office with reporting. But I think the one area, the softer things, that third part of the family office, which is the family, the governance, the family council, a lot of the values that drive things. Um, I think families will all continue to pivot through different stages of that. And it's really, I think, knowing your why a
No,
lot of
spot
times.
on.
And
It's sort of where we began the conversation. It's interesting, right? Really knowing your why and communicating that across generations. It's fascinating. I once walked into a family office in London, and this family quickly pointed me to a document, a family charter on their wall, and they pointed out to me, knowing that I was carrying an American passport, that Hendrik, as you know, the date of our family office charter predates Christopher Columbus's arrival in America, and I'll never forget that, right? Because that family has kept intact, right? Their brand, their value set, their wealth, right? For centuries. And when you look at that, again, just there's a lot there. We could have an entire session just talking about governance. But if there was one thing that you would say the families that have been successful in maintaining wealth, maintaining values, maintaining mission across generation, if there's one thing that those families have in common, what would you say that is, in your opinion, Tom?
I think it's two things. It's recognizing early that everybody in the family may not have a vote, but they have a voice. And that is incredibly important for harmony and continuity. Um, the second thing is, I think it's really important that there be a story of the family, and that story include uh, things that aren't necessarily the highlight reel. A lot of times, if it's Gen 3 or Gen 4 or Gen 6, um, you have a tendency, I think, to look at that first gen in a hero kind of mindset because of what they've done. And you don't hear a lot of the difficulties they had as human beings, that it wasn't just a highlight reel of just up and to the right all the time. And so I think that's where, it can be very interesting. So having a concise story that's passed down and where people understand the family, and everybody has a voice, not necessarily a vote, but a voice, is critical. It's interesting, the family you just brought up in your example. My guess, when I was listening to you, I was thinking that's probably a family that still owns operating businesses.
That they do. Spot on.
Yeah. And, that's a great way, right, to keep the family together is when you haven't had, the sale of your business and then, it's still a going concern and you want to have family still control that, for whatever the reason may be.
No, incredibly powerful insights. The last 2 points that you just communicated, it's interesting. Um, I actually am working on a book and won't be near as successful as yours, and it's really not intended to be published anywhere other than for my children and maybe a few others. But the experience and the lessons that I'm learning, researching back, my ancestry goes back to the Netherlands, then came to South Africa, fought in the Anglo-Boer Wars. Um, Again, bumps and bruises along the way, but a lot of things to be proud of, values that are passed down across generation. That has been an incredibly powerful experience for me. And I think the only point I would add is that exercise, right, of going through that, as you know, the catharsis of writing a book, of learning, of educating yourself in and of itself, I think is a noble cause.
Thank you. Yeah. Hey, can I share a quote, something that somebody said to me one time?
Please, of course.
And this was about how you keep a family office together. You just said something that kind of really made me think. They said that tolerance leads to conversation and conversation leads to problem solving. Um, so it was kind of interesting because it sort of came out of this broader conversation of, each generation may have a different story to tell about whose money it is in the family office. Um, and, a lot of times you want to try to get to the root of that
Right.
and have everybody come out of that as a win-win. Anyway, I'm sorry, I kind of got
No,
off.
no,
I
that
keep
was
doing that.
amazing insights, and I think that sort of wraps up our time here. But I just want to thank you so very much, Tim. And I know how busy you are. I know that you're doing some amazing things. I think your story, is one that's inspirational. What you're doing in connecting families, creating ripples that flow through not only investing but family values across multiple generations is profound. And I want to thank you for that, and really, really appreciate your insights today.
Well, this was a lot of fun. I'm grateful that you would ask me to do this, Hendrik. How cool
Of
is
course,
this?
anytime. And I know I'll see you in person soon. And really, thank you very much for your time.
Fine.
I hope you enjoyed that conversation with Tim Brown about connectivity of families around the world, about making change, about how to invest to create value and values that last generations. I would urge you to share, rate, and review today's podcast. We want to make a difference with it. We want to drive positive change, and we want to bring families together to learn not only about long term investing, but also about preserving and growing great values, prosperity that can last generations.